Today on GrowthShares, let's analyze and see whether the Home Depot is a great long-term investment. The Home Depot is the largest home improvement retailer in the US, supplying tools, construction products, appliances, and services. The company is headquartered in Cobb County, Georgia. It operates many big box format stores across North America. The Home Depot is ranked number 26 on the Fortune 500 rankings of the largest US corporations by total revenue. This analysis will be broken down to three factors: business, investment, and valuation, each weighted differently to signify their importance to the overall analysis. I'll break down the three factors further by dividing them to a total of 15 metrics detailing different areas of each factor. Business will have 8 metrics, investment will have 5 metrics, and valuation will have 2 metrics. Each factor in each metric will receive a grade of 1 to 7, with 1 being the worst and 7 being the best. After everything is measured, I'll provide a final score also based on that 1 to 7 scale. Let's first look at business. I place a big importance on business because it all boils down to how the business is doing, how it's making money, how it's utilizing its debt, how it's rewarding shareholders, and so forth. That's why 36% of the analysis is solely looking at the business. There are 8 metrics, each also weighted differently to the overall analysis, and we'll dive into them right now. The first metric is price multiple. The price multiple is based on the company's trailing 12-month PE ratio as a way to measure how expensive or cheap the stock is trading in relation to its earnings. The lower the ratio, the more sound the business. The Home Depot has a PE ratio of 19.43, and for that I gave a score of 6. The second metric is forward growth. Forward growth is my projection of the company's earnings growth, sales growth, margin growth, and so forth measured as a single percentage. The higher the growth rate, the more sound the business. The Home Depot has a growth rate of 11.83%, and for that I give a score of 4. The third metric is business margins. Business margins is a way to look at how efficiently the company is using its resources to generate revenue and thus profits. I plug in gross profits, operating profits, and net profits as a single margin percentage. The higher the margins, the more sound the business. The Home Depot has margins of 19.27%, and for that I give a score of 5. The fourth metric is rate of return. Rate of return is a way to look at how effectively the company is using the investments it's been given to return back to investors through the course of its main business purpose. I plug in return on assets, equity, investment to calculate a single return percentage. The higher the percentage, the more sound the business. The Home Depot has returns of 268.67%, and for that I give a score of 7. The fifth metric is debt utilization. Debt utilization is my way of looking at how the company is using or not using debt financing to keep its business afloat, or by using it to grow its core business. I find that too much debt isn't a good thing. I created a formulation called a natural utilization shown as a ratio. The higher the ratio, the more sound the business. The Home Depot has a natural utilization of negative 71.8, and for that I give a score of 1. The sixth metric are dividends. Dividends are based on the principle that a long-term investment must provide some sort of income for its shareholders, thus the need for a dividend. By simply looking at the yield, I'll see whether the company is paying out its shareholders. The higher the yield, the more sound the business. The Home Depot pays a 2.46% dividend, and for that I give a score of 7. The seventh metric is operational margins. Operational margins is how I look at the company's book value, its sales, its cash, and its free cash flow to formulate how a company is using those aspects in operating its core business. The calculation comes out as a ratio. The lower the ratio, the more sound the business. The Home Depot has operations at 60.3, and for that I give a score of 1. The eighth and final metric is sustainability. Sustainability looks at the company's exposure to environmental, social, and governance issues that are important to many investors. They are combined into an ESG risk rating. The lower the risk rating, the more sound the business. The Home Depot has an ESG risk rating of 11.5, and for that I give a score of 6. Adding these 8 metrics together, the Home Depot has a business score of 4.19. Next, let's look at investments. Investment accounts for 24% of the overall analysis because I place a good amount of focus on how externalities are affecting a company, mainly its stock price. I want to know what patterns traders are looking for, what other analysts are saying about the company, whether investors are shorting the stock, and so forth. There are 5 metrics, each also weighted differently to the overall analysis, and we'll dive into them right now. The first metric is stock performance. Stock performance is a technical trait that looks at how the company's stock has done when compared to others in its industry, as well as a benchmark such as the S&P 500. The range accounts for various durations to smooth out business and economic cycles. This calculation is used to create a ratio score. The higher the ratio, the more attractive the investment. The Home Depot has a performance ratio of 0.6, and for that I give a score of 4. The second metric is technical analysis. Technical analysis is a momentum trade that looks at how traders are seeing the company through the lens of buying or selling opportunities. I look at the 200-day moving average and RSI to create a single number called a range. The higher the range, the more attractive the investments. The Home Depot has a range of 7, and for that I give a score of 3. The third metric is short interest. Short interest is basically what percentage of the company's stock is being shorted, thus giving me a sense of the downward pressure investors and traders are putting on the stock. The lower the percentage, the more attractive the investment. The Home Depot has a short interest of 1.02%, and for that I give a score of 6. The fourth metric is Wall Street analysis. Wall Street analysis is based on how others are looking at the company. I'm not the only one analyzing the company, and those who offer their recommendations can sway investor sentiment. I combine these consensus picks as a percentage of those who look favorably on the company. The higher the percentage, the more attractive the investment. The Home Depot has a buy recommendation of 72%, and for that I give a score of 6. The fifth and final metric is institutional ownership. Institutional ownership looks at what percentage of the company is owned by investment firms, funds, and so forth. I want these big players to own a part of the company. It signifies the idea of safety in numbers. The higher the percentage, the more attractive the investment. The Home Depot has an ownership of 71.7%, and for that I give a score of 7. Adding these 5 metrics together, the Home Depot has an investment score of 5.54. Lastly, let's look at valuation. I place the largest importance, 40%, on valuation, because this factor focuses on the 2 overriding aspects of my analysis. How dominant is a business, and does its stock price justify an investment right now based on everything I've detailed so far? There are 2 metrics, each weighted differently, and we'll dive into them right now. The first metric is market dominance. Market dominance is what Warren Buffett calls the company's moat. I look at the company's market share, its market cap, its share of sales, its competition, and its barrier to entry as a way to see how close to a legal monopoly the business can get. This is shown as a hierarchy. The Home Depot has primary market dominance, and for that I give a score of 7. The second and final metric is fair value price. Fair value price accounts for 30% of the entire analysis because it tells me the entry price at which to invest in the company. All 14 metrics can give me a 7, but if a stock price is too expensive, it's not the right investment right now. I use a discounted cash flow model with conservative growth leaving room for a margin of safety. I compare that price with the most recent stock price and see how over or under the price is to its fair value price. The further the stock is trading below its fair value price, the better the investment. The Home Depot has a fair value price of $300.10 per share, which I consider to be fairly valued, and for that I give a score of 4. Adding these 2 metrics together, the Home Depot has a valuation score of 4.75. With all the metrics graded, we can tally up all 3 factors. Based on my complete analysis of the Home Depot, I give a final score of 4.77, which means I think the Home Depot is a good long-term investment. I'll also show the price of the S&P 500 and perhaps a year from now make a comparison which investments did better. My investment approach focuses on the long term. It's just easier to forecast and predict over the course of 5 to 10 years as opposed to 6 months or even 6 minutes. I personally buy companies during a short period of time. I don't buy it all at once in one day. I usually take about 2 to 3 weeks, roughly 10 to 15 trading days to build up my position. I'll figure what percentage of my portfolio I want to allocate to a single investment and then divide it by the number of days I'll be buying the stock. I'm a big believer in treating a stock like an actual company because, well, that's what they are. They're ownership in actual companies. The information I provide in this video and albeit in this channel can be found online and in most cases for free. What I do keep proprietary is the use of the information I found. With them, I figured them into these 15 filters, these metrics I went over in this video, and narrow it down to a single final score that simplifies and encompasses the true worth of an investment. And like these kinds of methodology, you may have a different approach to valuing a company. This is mine, and I found that it's worked for me. It might be or might not be perfect for you. You may like more risk, more excitement, but I'd rather focus on what a business is all about. It comes down to providing a service and whether that service is good enough and priced attractively enough to buy. Of course, it has to be said, this is my analysis and a good score doesn't necessarily mean I own or am buying the stock. Neither does a bad score mean I'm shorting or betting on the stock falling. My approach may not be right for you, so keep that in mind. My research takes about a week to complete, and since numbers, news, and figures change all the time, I usually do my research the week prior to publishing. Prices are current as of the last trading day of the previous week, but not always, and the valuation are up to date for a while. But hey, if you made it this far, shoot me an email. I'd love to get in touch with you and talk more. If you want to see me analyze more companies, hit that like button, subscribe to my channel, and share this video with other investors. And as always, take care of your money.